Bill Miller, volatility is the price of return, brilliant investor. No, Dom, I wouldn't be 100% invested in Bitcoin because I am not 100% certain it is going higher. I believe it is, but I cannot possibly be 100% certain about it. What I am 100% certain of, and this is what you have to bank on, fiat is programmed to debase. That is the certainty. That is the math. That is the mathematics of a debt spiral where they have to print money to meet the interest expense obligations.
One of the prominent businesses competing to launch a spot Bitcoin exchange traded fund, or ETF, ARK Invest, has updated its SEC registration to include a several and sharing agreement. The modification took just a week after BlackRock submitted its spot Bitcoin ETF application, which did contain such an agreement. ARK submitted its application to the SEC in April, almost 2 months before BlackRock did. Thus today's adjustment might enable ARK to take first place. Information provided with regulators in order to thwart potential market manipulation is referred to as a Surveillance Sharing Agreement, or SSA. Component comprises client identification, market trading activity, and clearing activities. The SEC is adamant that none of the candidates has demonstrated that they can effectively safeguard investors from manipulative activities. Greg Foss, a well-known Bitcoin enthusiast or realist who currently serves as the executive director of strategic initiatives for Validus Power Corporation and has 32 years of experience in high-yield credit trading and analysis, as a PM and trader, offers his opinion on ETFs and explains why, despite receiving SEC approval, it may take some time for the general public to adopt them. He also expresses his opinions on bonds and other types of investments. Please feel free to like, subscribe, and leave comments as you watch the video as we get started.
So I've never seen a simpler investment decision in my life, which is to move some of the exposure from government bonds, which is a soft asset, into the hardest asset that man has ever created. It's called Bitcoin, and you don't need to have 100% of your portfolio in it. But if you did, you'd only have to employ one person. And maybe there is the efficiencies that come with that. I am not advocating 100% position, though, for Ontario teachers, but get off of zero, please, on behalf of all of the hardworking Canadian teachers that perhaps don't know how to manage risk themselves. Not your keys, not your coins. 100% true. But let's understand that there's tax-advantaged accounts in Canada in which the government essentially gives you a 50% tax rebate if you own Bitcoin in Canada, called your RRSP, which is a registered retirement savings plan. I'm a huge fan of cold storage. I own Bitcoin in cold storage, but I also own Canadian ETFs because I view it as, in my tax advantage account, I can get $1.50's worth of Bitcoin for $1 investment equivalent. Okay. And that's important. And, you know, you have to balance the risks and returns. I'm proud that Elliott is one of the multiple ETF providers in Canada. I believe his pricing mechanism is one of the most ingenious of the products out there. But talking bigger picture, it is important to understand that a lot of people, particularly my age, love Bitcoin when it has a QSIP attached. And that's lost on a lot of people. For those out there that don't know what a QSIP is, it's an identifier for any exchange traded product. It will identify alphanumerically whether the product is an ETF, a bond, a stock, all of these things. But when you manage money and your systems are predominantly set up with an identifier as being one of the main, probably the key component of any database, once it has a QSIP, you open Bitcoin ability to be allocated anywhere and any analysis. There's so many legacy platforms that probably, you know, couldn't even accept Bitcoin until it has a QSIP. So well done, Elliott. The Canadian government is subsidizing your purchase of Bitcoin. I'm all for that. And that's why I would hold both ultimately, cold storage is the solution, but in terms of tax advantaged accounts, bring it with an ETF and low basis risk, high liquidity, good market makers, creation redemption features. I believe it's all good for the ecosystem. It's just one more on ramp. Coming from the bond markets, I do appreciate the liquidity that's provided in global global bond markets, and the U.S. bond market in particular. I mean, that allocation up there at 27%, that's high. I will note that it was probably higher, and on a mark-to-market basis, since most global bonds have been shredded in the last 2 years, it's come down, or they did a proper duration exposure. That being said, I wrote a paper on this. It's what sort of got me some Twitter fame, is why every fixed income portfolio, every single fixed income portfolio in the world, in my opinion, needs some allocation to Bitcoin, which means my first and favorite spot of taking an allocation from is from the bond portion. Now, I may argue that Microsoft at 7% of the portfolio, damn, those are some pretty big gonads these guys have, that they're rolling the ball on Bill Gates. Well, not Bill Gates anymore, but you know what I'm saying. There's mixing and matching that can go on. So I would take it out of the bond market, but I'm not fussy. I just need to get it into Bitcoin somehow. And then, more importantly than perhaps the allocation, is your rebalancing assumptions and how you're going to monitor that position and manage the risk according to the price swings. And that can be the difference between positive returns and negative returns if you're effectively dollar cost averaging in both directions. So, there's big decisions to be made here. Once again, we have a tool that you can get to the brass tacks on, which is the Nakamoto portfolio tool that Hoffa has put together. I'll just say this. I already know what my answer is, and it's crazy, but it is far higher than the 2%, but it's not the 25% allocation that is the optimal, okay? We're not arguing with anything here. The optimal portfolio allocation, according to Hoffa's math with respect to the asset allocations that the teachers have made, is a 25% allocation to Bitcoin. Oh my God. Because at the end of the day, this fund, if I'm not mistaken, what's the size of the fund? Hoffa, at least 400 billion US dollars, yeah?
250 billion, I think, right around there.
It's only okay. I'm disappointed. Come on, teachers, get your contributions higher. But anyway, as pension funds go in Canada, that's still huge. The largest fund in Canada, if I'm not mistaken, is somewhere around 600 to 800 billion. But that being said, imagine if you're still 250 billion, and all of a sudden you're putting 25% of your portfolio in that. That's $50 billion of buying into one fund, into a $500 billion asset class. You couldn't do it. It would be impossible. So you have to consider the liquidity constraints in the market as well. So I know my number. Wait until close. I'll wait until the next boys give their things. It's more than zero, and it's not as high as 25%. But come out of your bond portfolio, please.
According to new data, affluent UK investors are rushing to purchase tax-free bonds as rates increase. When compared to the same period in 2022, new data from Interactive Investors indicated a nearly tenfold increase in direct bond trading in the year to date. Nearly all of the activity was focused on gilts, as more investors look to benefit from the financial planning advantages of owning gilts and the fact that they are exempt from capital gains tax on any profits generated when selling or redeeming the bond. According to Interactive Investor, short maturity bonds are very popular. The tax-free capital gains allowance has been reduced, according to Interactive Investor's Sam Benstead, making gilts an even more efficient option to lower tax expenses. According to him, the most well-liked bond urged that investors retain the bonds until they mature in order to lock in yields of more than 5%. Expectations that the Bank of England can only control inflation by forcing the economy into contraction with ever-rising interest rates have distorted the bond market. The SEC has not yet approved an application for an ETF based on the underlying asset of Bitcoin, which is traded on unregulated exchanges. The agency claims it is unable to guarantee to investors that there would be no fraud or market manipulation. Only Bitcoin futures contracts, which are listed and regulated on the Chicago Mercantile Exchange, are the basis for the crypto asset swaps that the US has permitted. ETF and cryptocurrency markets are attempting to follow BlackRock's lead. After having their applications for spot Bitcoin ETFs rejected in the past, Invesco Wisdom Tree, Bitwise, ARK Investment Management, and Valkyrie have all resubmitted them with significant changes. ARK has surpassed BlackRock in the phylum coup, and the SEC is expected to rule on its application by August 13th. The discount to the net asset value of the $18.9 billion Grayscale Bitcoin Trust, GBTC, the largest cryptocurrency fund in the world, has shrunk significantly to a 9-month low of 31.3%. Grayscale is suing the SEC for not allowing it to convert GBTC into an ETF, a move that, if approved, would likely result in the discount going away. BlackRock's outstanding track record contributes to some of the optimism. According to Eric Balchunas, senior ETF analyst at Bloomberg Intelligence, the asset manager has had 575 filings accepted by the SEC and only one rejected. He gave a 50-50 chance of being accepted on this particular occasion. Who do you believe would win the ETF race now that ARK Investing is a contender? ARK Investment or BlackRock? Please share your decision with us in the comments area below. Don't forget to support us by clicking the like button, joining our mailing list, and turning on notifications for new videos. Thank you for watching.